Good evening, ladies and gentlemen. This is Clueless A Trading Frank. This is the Sunday ACS. In fact, it's actually a strategic market update webinar, not an advanced coaching session. Free to all members and free trial subscribers. It's Sunday, January 29, 2017. Session will be uploaded to the Clueless A Trading YouTube channel. And if you're a subscriber and just put your email in it, you'll be notified immediately and you can listen to it at your own time. Full disclosure, this is purely for financial education and not for any solicitation or advice. So tonight is a very important evening in the onset of a very important week coming up. And of course, there are political developments over the weekend, which a lot of, I would say, emotional traders and investors are going to be very concerned about, and you know there is some room for concern, and they'll be doing stupid things. So what we want to do in this particular Sunday evening session is keep this very technical and keep it within reason, so we know pretty much where the markets can go, and we're prepared to fight the battle as we start Monday morning. And that's really the purpose of this strategic session that I'm holding. So a couple of quick comments about the market and about Clueless A Trading that I think everyone should be reminded of. We are in the midst of a very powerful intermediate term bull market in what I call wave 5. Wave 5 is the wave that basically carries us, in my opinion, through March or the first quarter of 2017, and we possibly make a substantial top in the market sometime by the first quarter, end of the first quarter, which would be at the end of March 30th or so, in March 31st of 2017. I've seen this happen before on these very powerful breakouts, and everyone thinks that the market's topping and they're going to crash and burn. We'll never see the top again, and then the market turns around and goes higher. We have seen this happen repeatedly over the past couple of years, not to mention since 2009, but we're seeing it happen quite a bit now. So bottom line is that the only way that a trader or an investor can survive these markets and make some money out of trading or investing is to stay very tactically focused. Because without the strategic technical charts that I put out there and the precision tactical charts and all the names that I call them, because they are very precise, you'd be lost. Traders would be lost, my members would be lost, and not to mention what's happening out there with the other traders and investors who seem to be swayed by every single move in the market up and down, and constantly keep on losing their heads in a game of or in a state of euphoria or manic, what I call manic depressive, getting too excited, getting too depressed, and it just, in my opinion, it's not the way to be a consistent trader, or not the way to lead life. Because I've always said, you know, that trading teaches you a lot of important lessons about life and how we lead our lives. And believe it or not, it's a fact. And you know, you can't be just swaying from one side to another, even though that's the first human reaction when somebody's having a good week or a good day, or a certain stock, you know, went up big time, and then something else didn't go, and you can't be swaying back and forth. It's a discipline that one has to practice. It's a habit that one has to acquire through very, very hard work, and I mean that, very hard work, and it's mental work. And some people grasp it. They're mentally strong, and they develop that habit of rationality. And you don't get that by simply sitting there thinking about it. You get there by really, really understanding the robotic nature of the markets, looking at every single chart that I'm putting out there, looking at their own stuff, using their own gut instincts, and moving through with it. Because the only way that I remain sane and keep a somewhat of a well, not somewhat, quite a very stable, calm mental frame through all this intense volatility, up and down, is that I rely on tactical strategic charts that are in front of me and the structure that I put on them. Because charts are nothing without the structures you draw on them. That's what gives you the roadmap, so you know where you can slip and which ditch you're going to fall in, and where you can climb up and run and gain speed and make that money back up and move well ahead. So without actual technical, without the technical backdrop, and the way I'm showing it, and then your own stuff that you're looking at from yourself or from other sources and stuff, you will not survive this market. 2017 is the year of the rooster. This weekend was the Chinese New Year, and the year of the rooster, by definition, is hard work and winning through lots of twists and turns. That's basically the summary of the Chinese explanation of the year of the rooster. Okay, look it up on your own side. So this is it. All right, this is it. So bottom line is, right now we are sitting here on a Sunday evening, and I appreciate all of you coming in. So let me finish off. Actually, let me finish off my thought on the market. So what's happening right now is not only the fact that the markets are making new highs, and the power of the policy initiatives of the new Trump administration on the business side is creating a very favorable climate for companies. It's not just that, it's also that we're in the middle of earnings season. And this is a very important earnings season, because a lot of companies, this is really a stock market that's being played out in front of us. Now, what do I mean by that? What I mean by that is that it's going stock by stock. It's going stock by stock. Stocks are getting rewarded for strong earnings or stronger guidance, or a certain aspect of their business is moving forward tremendously. So that's what a stock market's all about. A stock market is not when everything lifts and the tide lifts all boats. You know, that's what a rookie baby investor likes to think, or a trader. It doesn't work like that. It's stock by stock. And that's what we saw. Okay? And then on top of that, what creates this massive volatility is the fact that these machines, which completely dominate the market, and many of you are grasping that very quickly. This Algo HFT program, short for Algorithmic High Frequency Trading Black Boxes, programmed by a bunch of quantitative rocket scientists, real math PhDs and math geniuses, young and old, have absolutely no clue about the market. They're playing by numbers, momentum, and all kinds of what do you call it, quantum math, and figuring out a model that's playing upon the market. Primarily the algos which dominate the market are momentum algos. They will accelerate, and please focus on this as I'm talking to you, because this chart has been drawn to exact precision. And believe me when I tell you, it's drawn to exact precision. And you've seen this before, but I drew a couple of extra lines like this, this, and this. So look at it, and you'll see a pattern. Okay, you will see a pattern, and it's going to blow your mind away, and I'm going to explain that to you in a few minutes. So keep looking at it while you listen to me on my market thoughts. So bottom line is, these Algo HFT programs are constantly playing havoc. And one of the things I've learned over the years is, don't try to make sense of them. Try to focus on the tactical levels that I'm showing on individual stocks or the markets, because that's what's going to really keep you afloat and make you the money. These Algo HFT programs, which most people think are random, they're not. They're moving within a very structured level. They're creating random volatility, which is structured. In other words, through order, through chaos comes order. I don't want to sound too like, get into the high level stuff of, what do you call, quantum mechanics, but through chaos comes order. It's always been like that in life, and it's the same thing in trading. So these algos constantly create chaos on a minute or an hour or a daily basis. It's hard not to lose, not to have bouts of fear, massive fear, like, oh my God, what's going on? That's okay. But you have to know the levels. Once you know the levels, once you know the structure, the patterns, you're gonna stay calm. Somebody says, hey, you're always very calm. Somebody told me. I said, no, I'm not always very calm. I'm always stressed out. It's positive stress, guys. Ladies and gentlemen, it's positive stress. I am always into positive stress. Because if you're not stressed out about real money being played out and real money being made or lost, then you are either a Saudi billionaire, son who's got a couple of $1 million in your bank account every month and buying Bugattis at a whim, all right? Or you're just somebody who just doesn't give it, F for money. You always have to be stressed, but keep it positive because that's what life all about. I am sick and tired of listening, seeing fearful and scared all the time. I get angry at myself too sometimes if I move out too early on something because I think my profits are going to get squeezed, and then I see it run up and I leave the last 30% on the table, or in some cases on a very short-term trade, leave the next 100% on the table after taking 100% on those weekly options. I get mad at myself. So get mad at yourself. That's another good way of really becoming a solid trader. And believe me when I tell you, if you do not get pissed at yourself, you will never make it in this business. I'm telling you that right now. And if you think that's a joke, don't trade. You're not a trader. You got to get pissed at yourself to the point where you, like I say, slap yourself silly. Stop making excuses. Get into the game. Because if you're not in it, you're not going to win it. You're going to always be a sideliner saying, oh, well, there's a next time, which are the worst words you hear in this business. There is no next time. There is the present. There are no perfect moments. Take the moment and make it perfect. That's it. So live by these mottos, live by these credo, and believe me, you'll be an amazing trader. You will make more money in this business that you'll ever see in your life. So we're entering the next phase of the market right now. This is the month of January coming to an end in 2 days. We have a big political event here over the weekend regarding these visa bans and stuff. I am not going to go into a political a diatribe on and commentary and thing. I have my own thoughts and I have my own feelings. But I do know one thing. This political act of this visa ban on these countries, which honestly speaking, are very troublesome countries, no question about it. Okay, I'm not talking about the people. I'm talking the political atmosphere of the countries. And believe me, I know very well, more than any of you out there. Okay, from a procedural standpoint, from a principle standpoint, was fine. But from a procedural standpoint, it caused imperfections. It caused difficulties. Okay? And then you throw in the little thing about religion. I mean, forget about it. It's a bonfire. But bonfire or not, I'll tell you one thing straight out, sitting here tonight and standing sometimes, because I stand up a lot when I'm trading. Okay? Or when I'm giving my webinars. It is not going to derail the movement of the market to wherever it wants to go. And the market wants to go a bit more higher. Period. Okay? Futures are down about 7 points. There are people on StockTwist right now freaking out. Ragar, who one of our members and a very old friend of mine, from StockTwist, Ragar, the goat guy. Well, he's not a goat guy. He's a very intellectual. He's a professional, but he raises a lot of these catatonic goats. That's how I met him. You know what a catatonic goat is? It's like a trader. All of a sudden, they fall every 60 seconds. They lie on the ground and they pass out. And then 3 seconds later, they stand up and they're cute as hell. That's called a catatonic goat. All right? Seriously. So bottom line is that he mentioned, like, you know what? Just be like Clueless A Trading. He mentioned that on StockTwist. Go read it. Look for buy the BTFD, buy the you know what dip from a tactical perspective. That's exactly the purpose of this session. So going back to it, this political firestorm that is sort of playing out in the media and worldwide does have some real implications on people, certain people, but it is already in the process of getting resolved. Let me just put it this way. The largest and the most powerful economy in the world, aside from us, one of the largest powerful in the Middle East is, somebody fill in the blank, which one? Come on. Who are the richest guys in the Middle East?
Saudi. Israel.
Israel. Israel is puny. What? Who said Israel? Israel is the most powerful military might in the Middle East and the most powerful democracy in the Middle East. It's not the richest. Who is the richest country in the Middle East?
Saudi.
Thank you. The Saudis just spoke for more than an hour, and I tweeted it out. Okay? With Trump this afternoon, there was not a single mention about all this hoopla about this very hasty, ban on those countries, people coming from those countries. The Saudis they talked about Syria. They talked about creating safe zones, which should have been done a long time ago. So these poor people who are getting bombed out of their minds can have a safe place to move to instead of trying to die across foreign seas and try to get in here in Europe. Okay? And that's it. The largest and the most powerful Muslim country in the world didn't make a big stink about what happened. So I'm keeping all the political and the emotional stuff out there. I'm just giving you the facts on the ground. If the Saudis raised a major, if you saw a major headline saying Saudis are really pissed off about what's going on, trust me, these markets would have collapsed a lot more, because that means there would be a massive a ripple effect across the Middle East, which would have major economic ramifications. That's my concern. From here all the way through the Middle East, through Europe. So that's a market positive. They're containing the situation. So, saying all that, let's now that I've sort of gone through the sort of overall picture, or covered as much as I can in this short period of time, let me go ahead and talk to you about what I think what the technical levels are. So here is one of the most important charts, which is basically a live investing.com. Definitely use it. Live 1 hour, which is basically the 1 hours of the tactical trading charts. And let's focus on what we see here. So here we have a line that I'd drawn, and this was basically the zigzag pattern for the last month and a half, and since December, when we broke out into this range. If you remember, we were stuck between a range of 2240 and let me just pull this up. There. So this was the range we were traveling in, mostly, other than slipping once here at the end of the year that everyone freaked out on and we bought, and the markets gapped open 18 plus S&P points. It was one heck of a start that some of you here know very well. Well, I'll mention one of them, my good friend JB. Okay? And we were flipping out saying, this is it. Okay? I wasn't flipping out. I didn't know we were going to gap up 18 points, but I did know that wasn't the end of the world, because there were 3 days of tax-related and other accounting-related selling at the end of the month, and I've covered that in previous videocasts. That was December 30th. So this was the range we were traveling in, and then we just went. This is the sort of the broader picture, so things in perspective. All the way from the beginning of, all the way from where we entered this range, which was back in the first week of December, right? First week of December, around 2248, around 2240, 45 on the E-minis, which is roughly about 2250 on the S&P 500. We basically did this volatility trading range that we played, the breakdown, the pull-up, then and the end of the year, and then we broke back into the range, stayed within the range, false breakouts, stayed within the range, a dip lower around the 12th, middle of the month. Remember, always the middle of the month when we get those big resets. That was the big reset in the middle of January. Middle of January, around the 12th. Back and forth, lots of fake breakdowns, fake breakouts. Then this very defined reverse head and shoulders that I showed, right? Inverse head and shoulders, right there. That was on the 23rd of January. And then came this big ass, excuse me, can say that, the big frigging out of control, see you later breakout. Took everybody by surprise. Didn't take us that much by surprise, but took me by surprise too. I did expect it to go higher. You know that from my previous video casts, and nothing new about that. And it's not that I'm a crazed bull. I'm a tactical bear too. So bottom line is that that's where we went, and we took off, and then we broke out on the 24th around 1 o'clock in the afternoon, right there, which was only a few days ago, last week. And this is what we did. Then we had a consolidation channel, and now we had this little, heat on this visa ban from the countries. Like I said, in principle it makes sense, but procedurally it was done kind of crappy. Procedurally they should have set it up the proper way. And that's what created not just the confusion, but some real issues with a lot of tech companies, which do, after all, we are a globalized world, whether, some people like it or not, we are all interconnected. And that's why the Googles and the Microsofts and the Facebooks and the Twitters, they express their concern. There's nothing wrong with that. Bottom line is, the heat is going to go down now instead of going up. That's my opinion. So saying all that, let's look at the levels that we come to. So here we are. This was the large cup. This didn't even create a handle. It just went straight up. Let me get my little drawing tool. We created a small handle. And all this happening very fast, as we know. Inverse head and shoulders, head. Multiple left shoulders. Let's stick to basic left shoulder, right shoulder, neckline. Also a cup formation with a handle. And again, it's like you have to act. Immediacy is key. Speed is key. If you understand charts, you can move in speed. When you don't understand charts, you do a lot of analysis paralysis, and guess what happens? You make nothing. So bottom line is, and a lot of traders, a lot of traders missed it. I know many of our traders did very well recently, and I'm very happy about that. I am. They were active, that animal spirits. They took the bull by the horns. They played individual stocks. They played the earnings. They played the intraday moves. That's what trading's about. Do it in small amounts. Small gets big. How many times do you have to say that? You don't have to go in there and put everything in. That's dumb. Then a Google happens if you put everything in. And then what? For a short day or two, you're like blasted out. But then it could have gone the other way. And Google, in my opinion, is still going to turn around and go higher. Which probably just, for now, it's lost its luster, at least for now. Now they're focusing. The fast money's focusing on the upcoming earnings, the Amazons, the Pricelines, the Facebooks. So many more to come. Not to mention the secondary companies. Not to mention the biotech companies. Forget about it. So Tesla, their earnings. So, so bottom line is that, anyway, so you had the cup, you had the handle, the breakout. Now notice one thing, which I had on the screen earlier on. So you go through this cup, handle, breakout, and now you're coming down. Now you're coming down. Futures are down about 7.5 points. 7.5 points. And you are basically, if you want to look at it this way, you have a couple of major points that I would be looking at on the E-minis, right? Because that's a dynamic part of the S&P 500. The first one I would look at is this breakout level here, right there. That's why they drew this line. This was the breakout level. Big one from this trading range and the market about making new highs, right? So that breakout level was 2277. Add about 4 or 5 points to it, you're looking at 2282. which was the previous ATH or all-time high on the S&P. Correct? Everyone okay with me on that? Okay. Now, whether or not this political situation happened over the weekend or not, we would at one point or another, sooner than later, and the sooner is the better part for the longs. We're going to come down and test that level. And that is exactly what is happening in process right now as we speak. So the level testing where the breakout level happened, which is around the 2280 level or the previous high on the S&P 500, in this case 2277 or so on the E-minis, is what's going on as we speak. Right there. Right there. Now, people who don't understand anything about technicals, people who don't understand about international political diplomacy and all that stuff, most Americans don't even know where the frigging Somalia is if you ask them on a map. Okay? So, they know where Iraq is because so many of our boys are out there dying unnecessarily. If you ask me, I don't want to get into that. Is the fact that that most of these countries are not even known. If you ask an average American Joe to find where Libya is, they'd be like, they put your finger somewhere near Australia. Trust me. All right. So forget about that. We're talking about. So they don't understand the this is basically political game theory that's getting played out, okay? So, or mix the political game theory with the technical game theory, arrive at a zone here. So whether or not that political game theory happened, we would still have retested this level. That's where we're going. So futures right now down 8 points. I would say that sometime by tonight, they're going to drop another roughly 5 points. And futures will be down about 14 points sometime by when the Japanese markets open, possibly when the European markets open by 4 this morning, Eastern Standard Time. So we are going to be down here. They're going to retest this. This retest will happen. Once this retest happens, that's where the fun begins. If there is some other stuff that we don't know, which are far more serious, damaging to the global interconnected economies, okay, because of the political events this weekend, then first I'm going to explain the downside. The downside is we got a nice free fall here, which would be this range that we broke out of. So that would be another 2277, 2257. Remember, the S&Ps always move in 10, 20-point increments, if you have noticed, okay? So this is a 20-point type of drop. So we're down 7.5 points right now from here, from the close, okay? So that's 7 here. Let's call it 8 points. So that would be a drop of 28 points. A drop of 28 points roughly is about 180 to 200 Dow points. Fast. So we are back to 19,800 if we get down to this level. That would be the downside, in my opinion, because this was a very powerful range we were traveling in for 2 months. Okay? I don't think it's ready to break yet. So this would be point of maximum buying opportunity, what I call aggressive buying, hands down. The probability model on my side tells me that the chance of another 20 handle drop, okay, 20-point drop overnight or tomorrow is low. I would give it a 20% probability that chance, 1 in 5 chance that that's going to happen. Okay? 1 in 5 chance that's going to happen, I would say. 80% probability, in my opinion. So just to cap off the downside, if it gets down to what's this 2253, which is roughly 2258 or so, 2257 on the S&P 500, it is maximum buying. You got to buy it because within 24 to 48 hours, because things are going to be so deep oversold. McClellan oscillator is going to be minus 300, all kinds of extreme oversold readings. Everybody absolutely terrified, what we call shit scared, to the point maybe the room's silent. That's a great buying opportunity, by the way. When the room gets silent, you got to buy, hands down. Telling you that right now. So if that happens, you buy hard, you sell hard real fast, because there will be a tactical bounce. That's a 20% probability of that happening by tomorrow. That's what I'm saying. Or by tonight. But we never know. We have to be prepared for all types of scenarios. That's why we do modeling. Okay. So we know what we're talking about on the downside. The more probable scenario is that we are going to basically come and retest this powerful breakout level, breakout zone. 1 second. Which was the recent one, right? That we broke out of. And the big trading range. Bear with me. Right here, gentlemen and ladies. And we're going to test this. The sooner this gets tested, the better. In other words, we're talking about now we're asking for another 4 handles down on the E-minis. Just give it to me, please. Because if it's dangling up here, like those dangling acorns in the stuff, and all of a sudden it drops in your head, okay? Or like some low-hanging fruit, like a bad apple. Ever been to an apple orchard and an apple just cracks in your head because it's just lying there, low-hanging? Well, that's what it's doing right now. So we need this. We might slip a little bit because you notice we can slip, when you hit something hard, it always overshoots, right? That's what we call a Bollinger overshoot. It's fine. We like Bollinger overshoots because Bollinger overshoots means we're going to swing back at least as a reflex bounce. No certainties, but at least into the Bollinger for a short time. The short time could be an hour, could be a day. So bottom line is somewhere around 2275 on the S&Ps to 2280, we need a retest. Once you get that retest, the market will have a reflex bounce. That reflex bounce will take us up another 10 or 15 S&P points. And then the market's going to figure out, and I would say it would take us here, because that was the last intraday dip that we saw on the 26th, right here. Right here. Okay? So you can see all this on your charts too, on your side. We fell out of this consolidation range. And so it would bounce hard. So if that's the bounce from the 2277 level, you got roughly about 11 points on the S&P that you can get. That's a decent sum of money from here to here. Because right now you can't do anything. I have those lottos. I kept on buying those lottos. So those lottos are probably going to diminish further. That's why I bought the lottos. Because they're January 31st. That's Tuesday. Hopefully they go lower in the morning. I buy more. Remember, I was trying to bid for them at 40 cents. Maybe they go to 10 cents. Buy a bunch of them at 10 cents, in my opinion. Because when this reflex bounce comes, it's going to be fast and it's going to be quick. Just like every other move in the market. Once it hits up here, it'll try to enter this range, just like it always does, right? Whenever it breaks out of a range. Whether or not it can get up there over 2300 and stuff, we'll see. One step at a time. I think it will. I think we'll have some surprise earnings on some of the big wigs that are coming out, including Apple, I believe, that's coming out when? Tuesday evening? I printed out the whole earnings sheets in my right there in one far corner, my printer. I'm going to go through it. So we'll see whether we can take that out. But that's the game plan, at least from a tactical level. And for many of you who are listening to it, some of you might be listening to it, that you would, that if you don't understand these levels, then you won't be able to manage your trades. That I can tell you. Whether or not you trade S&Ps, whether you're trading the Russell 2000s that I bought, you'd not be able to manage your trade. So you have to understand these levels. So there's your bad, ugly downside, which needs to be bought heavily. Okay, that's 20 S&P points from here. That's roughly about a 200-point drop from where we are. I don't think that happens. That's a low probability, just to summarize. I think we retest this overnight. Then the market stabilizes and start to bounce. Of course, it doesn't go in. It doesn't have to go out in a straight line, but maybe zigzags around. Maybe it slips a little bit. We don't know. Remember, there's another level here, right here. That's around 2272. Could be a little bit lower on the E-minis. I don't know. But that's the range. Or if we start to bounce and I see the stows, which are very deeply oversold right now, you can see that very clearly. What happens when things get this deep oversold? Below 20? Remember, the stochastics are, and these are the fast stochastics, but stochastics are the first derivative of the relative strength index, the RSI. Stochastics are a little bit more sophisticated. The RSI is a raw, the raw asset, the raw indicator. So what happens? Markets bounce. And then they come down. They get overbought, they come down. That's what machines do. Okay? Here, here, and now we're here. Now, it doesn't mean it's just going to straight up go up. It also can zigzag around below 20, frustrate the heck out of the traders, and then go. One way or the other, it's going to go. And it might go a little bit lower, but remember, it can't go any lower than 0. And that's pretty much where we are right now as we speak. Let's move on to the next chart. Now we're going to move on to Thinkorswim and see what's going on. A little bit more of a sophisticated, colorful picture of the same chart, the E-minis. Focus on this. Right there. Now you're seeing a real structure. You're also seeing the dynamic momentum index, which is basically a momentum index, just like the stows, overbought, oversold. It was overbought here. Move the cursor up here, pretty much at this level. It was creating a negative divergence during the day. That's why, like our good member here, JP, likes to always ask, how is the slow stochastics doing? Mr. Slow Stow, we call. Mr. Slow Stow had bottomed, but wasn't turning. Somehow or the other, remember one thing about the market, somebody knows what's coming. And Mr. Stow will, at this point, I am looking at it on my other screen. Let's see if I'm picking up after hours data. I am seeing, can show that to you because it's on my other CPU. I am seeing Mr. Stow's bottoming and kind of hopping around the bottom. Hasn't done that curl yet, which is a surefire trigger to buy the market hard. So, but look at the dynamic. This is happening right now as we speak. The last time we dipped, before we took, this was back on at 1 o'clock on the 30th. On the 30th, when people were losing their heads and we were tactically buying. Look where it was. It was at right here. So we're actually below that. We're actually below that. Look on the right side, right here. But it's heading straight down. It hasn't turned yet. But let's focus. Look at this structured level, which I showed you on the investing.com screen, showing you here. We're testing the upper end of this trading range breakout. What a beauty. So if this thing, if this political event policy directive hadn't happened over the weekend, then we would have seen the markets basically bounce, and at this point futures would probably be up 4 or 5 points, and we would have broken out of the consolidation channel. Instead, we took a scenic route, a scenic detour. How about that? But that's giving us more of an opportunity to get some better prices. That's the way I look at it. It's the way I look at it. Okay, so bottom line is, this is the zone, and this is roughly another 5 points, like I explained to you. And I'd like to see the futures down about 12 points before the market opens tomorrow morning. because then it would have satisfied the mandatory retest of the breakout level. It's weird how these things happen, but it always happens the same way. We always say one thing, and this event over the weekend is not a crisis. It's not a major crisis, okay? I always told my clients way back in the old days on Wall Street, I always told my traders since I started the service 2 years ago, 2.5 years ago, every crisis is the same for different reasons. Same thing in our lives. We think, oh, wow, it's a new thing. It's going to completely, it's just can't handle it. No, you can handle every crisis that comes along your way. It happens for different reasons. Your reaction has to be very tactical in life and in trading. You can't get emotional. When you emotionally react to a crisis, you're done. So this is the level. Very clean, very nice. If we fall below that, that's when you get that 20-point drop. That means another 120-point drop in the market or so on the Dow. And that brings us to the what I consider to be powerful buying opportunities at this level. And if a break of this level, of course, then we're looking on another 20 points down. Remember, they're all falling at 20 points, right? 22.50, 22.30, another major buy level. Low probability moves here. I think that's a low probability. 20% probability that might happen, 1 in 5. That's a 10% probability that we drop 200 to another 400 points within a matter of 2 days. Anything can happen, but that's a very low probability. The drop down here, this is a low probability. Can happen though, and more higher probabilities. We test this nice breakout level here, which took a whole bunch of weeks to happen, and then we bounce from here. We try to bounce back inside the consolidation channel, or if the market does want to go down, it's going to get rejected right here, and I'll be showing this all day long like I normally do, so now you know what you're watching for. And if it gets rejected here, you better short the market hard, because once it gets a rejection at the lower arm of the consolidation channel, which is this one, written in big bold letters, this one, then you're going to fall very quickly, because that becomes at that point, what's this pattern? Someone tell me quick. It's easy. This is kindergarten stuff.
Head and shoulder.
What was that?
Head and shoulder.
Absolutely. Head and shoulder. That's it. It's a classic head and shoulder. Head, left shoulder, right shoulder. We're falling. So just this level is very key. If it enters this zone, you're going to see the algo start to short cover, or not just short cover, but buy, because that's what they do. They buy, or they sell. So once they move in here, it's very possible that we hit the consolidation channel up here and then fail. Maybe the market does this for the next 2 or 3 days. Slide down within this channel, and then decide whether it wants to break out or whether it wants to break down and test the lower end of the trading range. We don't know yet. There's no way of telling. All I know on a short-term basis, I like what I see. Deep oversold, getting towards zero. It's at 7.2 right now. Won't take it much to get it down to zero. And then you see the turn. Could be like that. Now, if that turn is very fast and the market moves very fast and tries to enter this consolidation zone, and if the DMI or the dynamic momentum index or the stochastics, fast stochastics quickly get overbought, remember, this is a 4-hour chart. This is the closest cousin to the daily. So it carries a lot of weight. If the 4-hour chart is in overbought zone again, you know the market's going to at that point reset again. Telling you right now. So if for some miraculous reason, not miraculous, if for some tactical reason, Europe opens higher because they realize it's not a big deal, okay? It's not going to affect the global economy and stuff like that, because that's really what the markets care about. The markets, I hate saying this, but the markets don't care about whether people are dying or getting bombed and this and that. Look, I'm a survivor of 9/11. I've said that. Some of you know that well, okay? The markets were closed for a week. They opened up, they went down for about a week, and then they went up and they never looked back. So if the markets can can handle 9/11, it can handle a lot of stuff. Okay. So bottom line is that so this is it. If it gets overbought, yeah, I'll be showing it. I'll be like, hey, we're in overbought zone again. You got to manage your trades. You got to do what you need to do. So we'll see. So that's it. So this is the clean picture of what's going on. Okay, in front of us right now. It's holding right there. If you notice, let me show it. That's why I love like looking at charts. But I'm not a looker. I like to make money off charts. I'm not some sort of voyeur like peeking through a window and saying, oh, wow, look at those charts, you know. This is real deal. It's amazing how this, you know, this was your breakout right there. And look where we are right now. It is negative. The VWAP has turned down. The yellow line, which is the 5 SMA, has turned down. From that aspect, it's certainly negative. No question about it. The trend lines have moved down. And if they continue to go down, then I just showed you what we can do. But at one point or another, internals come into play because that's what tells you whether or not these lines, the VWAP, the yellow line, which is the 5 SMA, are going to turn. That's called predictive game theory. That's why I predict so well so many times ahead of what's going to happen. Because I try to look at the correlation between what's happening underneath to the correlation of what's happening here. And I warn traders, and I know many of you are sick and tired of me hearing it, don't just look at prices. Look at the overall picture. Because looking at prices alone will never make you the real money. And you guys know that. Okay? So that's where we are. Let's take a quick look at the hourly, which we look at. The hourly is in the same shape right now. Okay, and that's actually starting to turn. Now, somebody tell me, is this some sort of? I mean, I just noticed it. It just blew my mind away. Focus on this. Does something look similar? What does it look like? Do you see a pattern symmetry? This is like the kids. You remember when kids and they gave us those books and said, okay, well, find the pattern or what's similar, the boxes you give your kids when they're little. Well, this is for adults, guys. Okay, this is the adult version of that little book. Find the pattern. Can somebody tell me what they see? I don't want the name of the pattern and stuff. Do you see something similar in this picture? Somebody step up.
It's an inverse.
Huh?
It's the inverse of what's on that bottom of that side.
Exactly, boss. My good friend Rip there. By the way, who's Frank in here? Frank, could you identify yourself? Frank, could you identify who you are? And welcome to Clueless A Training. I'm sure you're a member, but I don't recall. Anyone remember any Frank in our group? Besides from me? Frank, can you hear us? Hello?
Margin call.
Oh boy, it's my good buddy there. Awesome. I can't hearing your voice. Guys, that's one of my oldest friends. Everyone say hi to Frank. He's the best. All right, let me not get distracted. Welcome, man. Okay, so here we are. So Rip, you just said it. Very simple. Now Rip has an advantage. He's got little kids. Okay, and when you have little kids, he's actually doing those books more than he's looking at charts. Okay, so no wonder he saw the pattern faster than most of you out there who don't have little kids. So what's the moral of the story? Have little kids, so you know you become the best chart reader in the world. Okay, I don't have a little kid anymore. My kid's over 18 now. You are absolutely correct, sir, and thank you for identifying it. This is also, in mathematical terms, a sine wave, which I don't want to get into it, but some of you remember mathematics. Some of you probably, got some decent grades in calculus. There. Okay? That's a sine wave. Not a SIGN. So there you are. And you're absolutely correct. Now, the only way why these patterns happen the way they happen is because the machines control the market. Period. That's it. If black boxes and actual mathematics didn't control the market, you would never get something as symmetrical as this. You would get what our brains go through during trading days, which is just mush. Do you ever see a pattern like this? No. Because we don't control the market, guys. Because our brains in the middle of a trading day or during the trading week is like that. Okay, going backwards. You don't see patterns like that. Instead, you see actual structured patterns, what I call structured volatility, such as this. End of story. So the hourly is already bottoming. We want the 4 hour to do what we talked about, and then we're good to go. The lower the market opens tomorrow, the better off it is for us to buy some tactical buys within the framework of what I see in the morning, and we shall be rewarded. We don't want this low hanging just down 7. We want it to be down 11 sometime during night and then move forward. Now, this is the chart of the Russell. I play the Russell time to time. I play it during some major moves. If you remember, I bought the Russell 2000 around 1100, around 1050. And some of you did with me too. And I wish I'd held it all the way through. Instead, I took staggered profits. One of the stupidest thing I could ever do. Because Russell calls went from $3 to 86, guys. This was during the move after the Donald became president. And we kept on taking staggered profits. So I missed out some chunks of them along the way. But if I was as robotics as I should be, which I actually failed to follow my principle, I said I would leave the original amount in there and keep on taking staggered profits along the way. Instead, I sold the whole thing because things were moving so fast. I'm like, man, I'm taking the money and running. And then I went back in again. That same Russell 2000, which rose from the depths of every single analyst out there telling us that Russell 2000 can never do anything, that the U.S. small cap market is dead, signs of a recession, blah, 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 blah. Okay? Since November, if you remember. Okay? Crashing. Move from the after hours low of 1124 to 1395. Ladies and gentlemen, in trading, if somebody basically tracked this, and we did track it, but we took staggered profits, but hypothetically speaking, the calls which were here around $3 were here around 86. Do you realize what kind of percentage move that is? That is almost 30 times. That means 2,000%. 2,000%. And it didn't take 10 years. Tell me on real estate where you get 2,000% in a matter of days. Because a lot of people think real estate is the next best thing than buying a real estate property in heaven. Okay, from 11.7 to in a month, that's where it was. A $3,000 investment would be $86,000. Of course, it wasn't that easy. I mean, there were intraday fluctuations, all that stuff. This is a normalized picture on a daily basis, so it smooths things out. But you can see what I'm talking about. So the Russell 2000, in my opinion, I started, and we played it a little bit here and there, but then I kind of left it. So I'm back into it. Now, why? I'm back into it because the Russell 2000, which has been hammered a little bit lately. Okay, I'm going to look at the hourly picture here. Showed me a structure, and I liked it. And that structure was that it moved up real fast from last week, from 1340 back towards the highs, had a nice structural pullback, tested this breakout level here almost. Now after hours is testing it, and I believe, and I'll be looking at this here. 1 second. Remember, this was the breakout. That's your dragon bullish breakout. Okay, right there. It's testing it. It's tested it. It fell below that. There is another breakout level here. That's where it's going. So the Russell 2000 is good for a bunch of points, and from a structural standpoint, from what I can see, I'm focusing on this chart, which I've shared with everyone, right there. It's a consolidation channel, and believe it or not, even after tonight, which the future is only down 7.5, big deal, we are here. As you can clearly see, it does have room to drop. Russell 2000 has been somewhat hampered and not moved that fast as the S&P because of what asset class? Can somebody tell me? What type of companies? I mean, there are many type of companies in the Russell 2000, but what one asset class has somewhat underperformed the market?
Small cap.
Huh? Small cap is not an asset class, sir. I should say, my apology. What sector has somewhat underperformed the market lately?
Pharmaceuticals.
Yes, that's one. What's the other one? It's I'll give you a hint. It's a physical asset class.
Gold and silver.
That's right. Thank you very much. So lots of gold miners and silver miners, they're all within the Russell 2000. So the Russell 2000 had a little bit of a tough time. Okay? And the biotechs, like you mentioned. So the bottom line is, again, I'm not asking for the moon. The way I was looking at it as of the close on Friday was that I'm looking for it to move up towards retesting and possible entry in this in these channels. Okay, this is a beautiful structure here. Move up, consolidation, and what I'm thinking is try to attempt to get back here towards the 1380 level. You got roughly 20 points from here. Now these are the Russell 2000 futures. Obviously the TFs, the RUT closed at 1370 around there, and I like it. So I think the Russell 2000, here's another major macro reason why I like it. With all the trade friction, all the talk about border taxes and tariffs and all kinds of stuff that's happening out there, the sector or the large cap multinational are the ones who basically get hurt the most, right? Because they're the ones who are doing global business. Russell U.S. small cap sector, what I call the U.S. small cap infantry, does business within the U.S. There are no borders within the U.S. So from a standpoint of looking at who would be the biggest beneficiaries of the Russell 2000 in case there are mandatory tariffs and border taxes and God knows what, which I don't think is a great idea if you ask me, but who the heck am I, which are going to hurt a lot of multinational corporation stuff, and that's why a lot of CEOs are not happy about it. The Russell 2000 are the biggest beneficiary of it because they sell, manufacture, and mostly, and 90% of the time sell within the United States of America. End of story. So keep that in mind. Keep your Russell 2000 in bay. Let me show you a couple of other quick charts. I was looking at the, bear with me. I was looking at the NIMO, the McClellan oscillator, right before I started the session. And then I'm going to open it up for a couple of questions on individual stocks. So the NIMO, which I pull out on stock charts, looks like this, guys. Okay, there is nothing really damaging. We are seeing signs of a topping process, minor. What I'm enthused about are these lines here. And I'm not going to get into it too deep. You're starting to see a MACD crossover on the histograms, which is solid. The first green bar, in this case is blue, whatever, is in positive territory. That's a plus. Stochastics got overbought. They retraced down to the 50% level. You can see that, the fastos. And by tonight, they are going to be resetting down here because this is not a dynamic chart. This is as of Friday's close. This is the New York Stock Exchange McClellan oscillator. Okay, so that means that we will most probably, the McClellan is trading within a range according to Bollingers of 41, and the lower end is -20, which was a big buy signal at that -21 level. I've mentioned the peeper, mentioned it again. Anytime you see that collapse like this, you literally hold your nose and you buy the market hard. If you see Just don't even ask your brain for any question. Just freaking buy the market, okay? Or at least the indices, because you will get a major tactical bounce within the first 24 to 48 hours. So at this point, the way we can determine how low the McClellan oscillator can go, I would say that with futures down 8, we are probably down here. Now, one of the ways I determine it is that I put the pivots. So support is at minus 33. That's why it's S1. You can see that S1. That's at minus 33. So worst case scenario, we would be coming down, at least over the short term, over the next 24 hours, we would be coming down to test minus 33 on the McClellan oscillator. Okay, we'll see. So nothing really negative about it. It is resetting on a strong bull market type of scenario where the market's uptrending, and I'll talk about the seasonal factor in a second. Where I still think why there is more juice to go in the market, and fund managers are still deploying money in the market, is that it tests that 50 level and it normally bounces from here. If it slips, then it's going to come down to that 20 level, bounce from here. Remember, the fast stochastics is the first derivative of the relative strength index. End of story. So Russell 2000 is starting to push back a little bit. That's why the market kind of, eased back a little bit on Friday. Nothing that crazy, but that's what it did. And then that's where we stand. Okay. Now, the other chart that I show, and my good friend Frank here knows it well, is the McClellan oscillator. I mean, sorry, the swing 533, and this is the way I read it. Remember, the swing 533 chart has to be read with the context of what the background in the market is. Charts alone don't tell you the whole story. You have to take it into account because every chart pattern will be nuanced and more complex to read. Somebody please mute their microphone. Okay. Thank you. So, can somebody please mute the microphone because a lot of family stuff in the back. Can somebody please mute the microphone? Thank you. That's good. All right. So with this is the way I'm reading it in the context of the uptrending market. You can see here the surges. Okay. Histograms. This is what I'm giving a lot of weighting to. The histograms have finally gone green. So even though the market's what this is doing here before today, it was simply creating a bull flag. Okay. And today we slipped below a little bit. The bull flag's not fully broken. It's just cracked a little bit here as of futures down 8. Nothing that big. So the histograms are telling us the actual buying pressure or selling pressure in the market. Okay, that went. You can see here it's actually growing despite the fact that we had 2 days of consolidation. Interesting, huh? Exactly. The real buyers, the real pressure in the market on the big money going back and forth. The real pumpers and dumpers in the market are still pumping the market. Stochastics got overbought. RSI got, relative strength got overbought at 90, pulling back. We will retest this 50 by the open. You can bounce off the 50 or it can get oversold again, a little bit lower. Does not matter. This pressure is telling us that it'll either test 50, which I've seen many, many times. It comes down, it tests the 50 level, and then it bounces. So far, so good. What won't look good is if we break the S&P below, let's say 2260. That was the trading range, right? That's when things change. When you start to see these two lines, these full stochastic lines, which are this red line and this red line, do this, then it takes a couple of days before it pulls back. Now, remember one thing here. And this is one thing I want to tell people this. And I know most of you have not even seen this chart, even though I've shown it many times. This had a full-scale crossover down. What did the market do? The market stayed within a trading range, up, down, up, down. It wasn't like the market went with it. So the point I want to make in that very clearly is that in a strong uptrending market, which most people don't want to believe it's uptrending, they just like, no, market's going to crash, market's going to crash. You know, that tomorrow, tonight, all you hear about in the other forums is like market's going to crash. I've been saying that since 2009, if you ask me. Not to mention since the market broke out months ago. That even though we had this stochastics on the swing 533, and this does adjust itself during the day. Okay, pull down, there was a crossover down, the market basically remained in a trading range, jumping up 50 points during the day, coming down 20 points, jumping up 50 points, and did that. So it went sideways while this basically, showed that it was coming down. Here, you had a crossover here. Market still went up for 3 days, and then inevitably it came down. This big drop was a 200-point drop in the market. And then it continued its way down. You can see that, but this stayed up. That's the signs of a strong market. So it's a lot of mixed signals, but I like this. It's gone positive, and generally once it goes positive, it creates at least 5 or 6 bars, which brings me to my next point. 5 or 6 histogram bars getting bigger. It doesn't have to be explosive like this. This type of explosive bar means the market is going to go berserk, up 500 points or 400 points. If it does that, market's going up another 400 points from here. I'm telling you that right now, whether we like it or not. Now, this bar should at least have 5 bars. Let me tell you why that correlates with my thinking of where the market's going. I told you all, and I stand by it, that we are going to go up. We are going to go up till the first week of February. Okay? We are at the end of first of all, we're in the middle of earnings season. The best of the best earnings are not even out yet. Okay? And so from a standpoint of where we are, let me pull up the S&P up here. What I think is going on, this was the S&P as of Friday. Look fantastic, says S&P is going to open down to 94. Let's scroll down a little bit. We actually closed the gap here. Isn't that nice? That is just fantastic. We are basically right now closing the gap on the S&P. There's your gap, gentlemen. There. So we're doing some gap filling after hours. And this was going to happen one with the other. The sooner it happened, the better off I like. Okay? So now, with the SPX, this is the day, 1 hour, everything you know. So what I think is going to happen, like let's look at a calendar here. The calendar is tomorrow's the 30th. That's 2 more days left for the end of the month. The window dressing happened last week. Might continue. Generally, window dressing doesn't happen doesn't continue till the last day of the month. Because, and what is window dressing? Well, you guys know that by now, where fund managers basically add alpha, to add beta, which means high momentum winning stocks in their portfolios, to add alpha, which means excess returns. Because everyone wants to look good. Everyone wants to say, I own Amazon, I own Priceline, I own Netflix, I own the winning stocks. I own NVIDIA. Why was NVIDIA all of a sudden up? Because it's still the winning stock despite its pullback. They started buying it because they want to show it in their books. There was no news on NVIDIA. So that's what happens with stocks. Stocks just all of a sudden just keep on doing what they're doing. Nothing wrong with that. So bottom line is that I think we're going to, so looking at the date factor, we have, so date-wise we have that. Now, here is the interesting part. Generally, the month ends, what we've seen in previous months, the month has ended, listen carefully, the month has ended with this push for window dressing and all that stuff, right on a weekend. This time, in January, the month is ending on the 31st, which is a Tuesday. Ladies and gentlemen, the first 5 to 7 days, I would say the 5 business days of the month, and I've been right almost 90% of the time on this. The 5 business days of the month have a positive bias to the markets. Has a positive bias to the markets because all the big pension fund money and the mutual funds, which are the 800-pound gorillas in the market, all your 401ks, people who work 401ks, company contributions, blah, 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 blah. Right? We are our own checks, so we don't get 401ks. So bottom line is that, go into the market placement. Now tell me something here. With the markets the way they're acting, with a significant amount of pension funds, mutual funds, individual investors, forget about it, like we say in New York. They're so underinvested, it's not even funny. People are underinvested. They are finally, like that cartoon that I put out there on the Twitter thing, are finally calling up their brokers and stuff to say, oh, did I put that one up? I can't remember. It says, hi, I heard the market crossed over 20,000. Can you move some of my money market funds into that growth fund you've been telling me for about 9 months now? That's what's going on. Okay? My first job was at Putnam Investments in Boston. I saw all that happen. I used to handle, all these calls from clients, institutional clients and stuff, even retail clients, starting off, and then I worked for all these different fund managers. That's how I learned the business before I moved to New York, to Wall Street. So that's what they do all the time. And then when I was managing some serious money on Wall Street, same old crap. When the markets were up a lot, they were like, oh yeah, that stock you told me about, wow, it's up a lot. Can I buy some? Friggin' what were you 4 months ago when the stock was 60% cheaper? No, nowhere in sight. It's like one of my biggest clients sold all his Apple, and he had thousands and thousands of shares at $80. And then a month later, the stock was at 110. And where's Apple right now? Oh, this was way before, the split and all that stuff. Anyway, to make a long story short, this is what happens. Okay, so this time, the 31st is not on a weekend. So the flow continues. The money flow continues. That's important to us because we are primarily momentum traders with swing trades in play. We are not here to make money 2 years down the road. Yeah, we can sit on stocks for 2 years, but hey, then, that's not why you're a clueless A trading. You want tactical charts. You want to make money. You want to make 100% here, make it 200% there on the option calls. You make 30% on a stock, 10% on a stock, 50% on a stock. That's what you want to do here. So bottom line is, so if I look at the date factor, 31st is a Tuesday. 1st, 2nd, 3rd. That's the first 3 business days of the month of February. All fall within this week. Then we move on to February. The other 2 business days left to complete the 5-day cycle is the 6th and the 7th. So I would say, mark this date, that by the 8th of February, we should have a short-term top, in my opinion. Because the flow of money, in my opinion, a fund manager sitting out there at CalPERS, California Retirement Fund, which is one of the biggest in the world, is not saying, oh, well, I'm not going to put money in the stock because, this thing happened over the weekend. No. He's going to go with the flow. He sees what's going on. He wants to be placed. So that's what I'm thinking, okay? So that's my sort of predictive game theory part, that given the last 2 days of the month, which is Monday and Tuesday, and of course we'll have intraday volatility. Show you the levels. So let's not forget that. And if certain things break, all this will go out the window. But I'm just giving you what I've seen. The flow, the money flow injection within the market should continue for till about the 7th or 8th of February. Don't forget, Valentine's is, I've been married so long, so, what's Valentine's? 14th of February, right? Right, Valentine's Day? So you got 14th of February, Valentine's Day. Don't expect the market crash before Valentine's. That I can assure you. They just don't do that. Just the way you don't short the market before a major holiday. Memorial Day, Labor Day. You don't do it. Just don't. That's suicidal. And because the markets like to stay higher prior to these days because these are big economic impacts. If market crashes 1,000 points before Valentine's Day, you think our Valentine's sales, which are the big component, the largest component of the U.S. economic growth is consumer spending, people are going to be feeling that good about going and buying those things, expensive presents? I don't think so. So anyway, so that's the thing. So that's my date factor. Okay. Now I'm going to open up to questions because I've covered quite a bit of important stuff and I'll be happy to answer that. Before I go any further, I love what's going on with Tesla. We have done very well on it. We continue to do well on it. This is a beautiful chart. and I mean it. This is absolutely gorgeous, and anybody who knows what they're seeing is just they know what they're doing. We're in a beautiful channel. Upper end of the channel is 265. This is where we were on, and again, there we are. This is just fantastic. We bought it all the way down here. I walked people through it. And what can I say? That's a 5-point move on the stock, and that's almost 100% higher on the little less than that on the calls. And not to mention that we've been buying it all the way down. Beautiful falling wedge that I kept on showing. I said the gap fill. That was the gap fill. And right at that gap fill, it turned, and there you go. You'll find some resistance here at 255. You can see that. That's why the lines are drawn. However, I believe this pattern gets filled tomorrow with everything going on, with the markets open down lower, which I think they will open down lower. You could get a retest down here, 250, possible retest of the 248. Just because algos, that's what they do. Drops 5 points. Another major buying opportunity, creates a dragon bullish like this, a W, and bang, higher. Tesla, in my opinion, is going higher. Whether is it a $300 stock? I don't know, but let's take a look at it. Upper end of the channel is 265. Let's take a look at the daily. The daily is scary for shorts. They are very, very not happy. That's another word of saying they are absolutely crapping in their pants. Because when you see a channel move like this, okay, because this is really what it's doing. Moving up to 270 is just around the corner. It's just around the corner. Let's take a monthly view of Tesla. Okay, let me hide the drawings and show you something. Okay, this is not a joke, guys. If you are short, you are dying right now. A painful death, and it's not nice for anyone to be in that much pain. But dogmatic haters of Tesla, because Tesla isn't going to stop. You hate him or you like him. I don't even give a crap about Tesla. I've said it before, I'll say it again. I don't even like Teslas, okay? But you gotta respect what this stock is doing. But the haters love hating. They love coming up with the same thing. It's a house of cards. Elon Musk is a scam artist, blah, 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 blah. Okay, fine. He can buy us and our 3 generations with his checking account. So whether he's a loser or not doesn't matter, because money talks and shit walks, like we say in English, right? Or we say in New York. So I do apologize for my language. Respect it. Upper end on the monthly is 275. This is just precision. Okay? Point of engagement moving up, 275, point of engagement. So I like the fact that it's touching all these base points. 275. Tesla calls, man. Guys are making money on Tesla calls. Not just me, but some of the people who are here. You know how good it feels. And the rest of you keep on watching, because that's pathetic. That people who are not trading this thing or haven't traded because they say, oh, I don't really trade it because he's South African. Maybe he should be deported. You know what I'm saying? I mean, come on. Then you're being stupid. When traders tell me they don't trade certain things, I mean, what is this? It's just numbers. Fine. You know, it's up to each person. Excuse me. I'm having my tea. So bottom line is, let's project out a little bit, okay? So I'm going to do one more projection, and this would be my projection, and this would be 2 points of engagement, which I like. When I say points of engagement, I'm talking about this and this. This is basically out of boundary. Eventually, Tesla is going to be a $365 stock, and it's not going to be that long. I think on earnings, it breaks out over 275 and hits that all-time high. I think it's going to overshoot 300. I could be dead wrong, but just giving you the bullish projection. Looking at the size of the candles on the monthly, it's been nothing but fat expansion candles. The size of this candle is almost double the size of this one. That's called an expansion. Okay, on an expansion candle move, another further expansion of the third candle brings it up to its 325. That's called an overshoot. Once it breaks to 325, the hardcore shorts, whoever got that lucky, you always hear the hardcore shorts say, oh, I shorted Tesla at 290. Oh yeah, they just happened to short Tesla at 290. You hear that a lot, by the way, okay? Oh, I shorted Tesla at 290. Oh, great. So that means you've just been constantly making money. You're telling me that when the stock fell to 150, you didn't take a profit. That means you're completely idiotic, or you're completely brain dead, that you did not take a 60-point 60-point drop as profits on the stock. No, I held on. I shorted more. Okay, great. So when the stock went from 150 or 160 or 170 up to 275, another 100 points, you just sat there because you know it's going to go down. That's when you know when dogmatic shorts lie. If somebody's telling me that they sat through not taking profits, giving back those profits again, and because I knew it was going to go back there, they are lying. Period. Look, I've been on Wall Street, and I've been a trader, and I'm doing this service. I can spot a liar. I know traders better than I know myself. I know who's BSing and who's doing whatever. So whatever the case may be, that's up to them, whatever they want to do. So bottom line is, at this point, the dogmatic shorts, the ones, maybe the institutions who shorted at 290, okay? Or the other ones who shorted here at that 275 level, at the 270 level. There are people, because this was a major reversal candle, so maybe there are some late shorts who came in and shorted here. They're starting to get panicked. And if they did not take profits down at 175, they shouldn't even be doing this for a business. They should just be a political dogmatic guy just sitting there saying Tesla's going to zero, Tesla's going to zero, Tesla's going to zero. Okay? Because at this point, they're about to order a year's supply of adult diapers. I'm telling you right now. Because once it hits this level, you're going to see the boom, the squeeze, like a toothpaste, squeezing the tube, boom. And that's what's going to take it up there. That's the upside. The downside, we know what the downside is. The downside is that it's got a very, very strong base at around 180, 190. So that's your downside. Your upside is 300 plus. End of story. Okay, price line. Price line's broken out. So price line at this point, CMG big move higher. This is JP asking. I don't know. All I know is I post my CMG charts. I've shown 445 as a major mover higher. So in answer to your question on Chipotle, I think it can get to 445. But it's a weird stock. It's a very technical stock. It moves within ranges. And the best charts that I show on Chipotle are using my quad algo HFT platform, which is obviously not this one. That's on my other machine. So I can't really show you that. So here's CMG. Let's take a look at it here, and let's do the analysis right in real time. Forget about monthly. Yeah, let's not forget about monthly. Let's do the monthly. So this is why I draw it. You take a trend line, you touch it here, point of engagement right here. 1 second. Okay. Sorry. Have patience. And JP, get a mic next time, all right? It's easier for me. Just get, just a little headset. It's like 20 bucks or so. You could get it from Amazon. So 2 points of major engagement, okay? Long term. 2013, 2009, 2008, $50 stock. Whoa. And here. 450 is the mark. Over 450, the stock is going to go to 550. I've shown that in my previous charts. I stick by that. It is very, very clear. Okay? So this is the way I do it. Price level. It looks like there's a strong support right here, which seems like it's in midair, but it's not. Why? Because this was that dragon bullish breakout at this level. That is support. 350 looks like it is the support, unless it breaks. If it breaks on the downside, in my opinion, you're looking at 233. After everything that CMG has gone through, Chipotle has gone through, do I really see it going to 233? No. I think it's a low probability trade. Can happen. What if there's another E. coli breakout? The stock is going to go to 233 or 250. We don't know that. Maybe the Russians hacked Chipotle. Maybe they don't like Chipotle. Maybe they just want to hack it and put an E. coli virus in their in the carnitos or whatever. Okay, in the burrito. I'm not kidding. Okay, it can happen. But barring that type of scenario, this is what I think is possible. This is monthly. So these are, and then we're going to look at the short-term stuff, which we always do. Let's do this here. Duplicate, trend line. Oh, come on. Okay. But let me do it this time. Yep. So this is that big fat channel that that the bulls are dreaming of. And who's the big activist in here? Ackman, right? Ackman? And Bill Ackman, right? And okay, so this is what Bill Ackman's looking for. An entry into this channel. Bill Ackman should be listening to my charts if you ask me. I'm serious. So entry into this chart over 450, because all it's going to do, month after month, it's going to take a few months, it's going to head back to the upper end of the channel at 700. That's exactly what it's going to do. That's exactly what it did between 2012 and 14. But like my wife says, it gets a little tiring at Chipotle. I'm not talking about the different flavors of E. coli. I'm talking about the fact the same frigging menu over and over again. They need to introduce more of their pizza stores, the Chipotle burger, their Asian fusion theme restaurants, which they have in some different markets. They need to bring those to New York. They need to bring them to New Jersey, where the real money's spent. America spends real money in these parts, not in the middle, because the rich live on both coasts, not in the middle. Okay? That's where they spend money. So the bottom line is, if you start changing the menu, you start doing the, and that's why Ackman should be listening to me. And you change that, Chipotle will move up 30, 40, 50 bucks in days, because people love the brand. They need a little bit more variety. They need to have the geographical locations, not frigging Washington, D.C. They need to be New York, New Jersey. That's it. So short-term view on Chipotle. So this is the way I'm looking at it. The other way is, which I've shown before, I'll show it again, why this level is important. You do a fib retracement, and the 50 fib is right there, ladies and gentlemen, at 400. Right there. Right there. See, that's exactly what the market's been, Chipotle has been trading off since June. Since June. July, August, September, October, slipped down. Okay, slipped down to 350, but only stayed there for 1 month. Back to 400, back to 400 is a key level, both in round numbers and from a multi-month, multi-year, forget about multi-month, multi-year Fibonacci retracement at 50. The 50 fib is very powerful, very powerful. Stock frigging went from 50 to 800 in 8 years. Okay? So it had to give it back, E. coli or not. It gave it back fast. The faster it came down, the better it is for long-term investors. That's it. So short term, that's what we're concerned with here. So on a short-term basis, I would look at the 4-hour. On a short-term basis, to be honest with you, my quad charts are the best. So the higher upper end of the range is, let's look at the daily. Let's look at the daily. So here you have, let's move all these lines out. Hide all drawings. Let's draw this out. We are seeing we're seeing multiple things going on here. Okay, first and foremost on Chipotle, The 540 level is what I showed you on the other charts. Trend line. It's broken it nicely. It's over. It's over the trend line. That trend line retest, if it slips down, is 387. At 387, you got to buy with both hands down. Okay, grab those burritos as fast as you can around the 386, and if it slips lower. However, given where we are right now, I'm seeing patterns. The patterns I'm seeing, I'm going to quickly draw out. You got multiple, you got a triple bottom. You got a triple bottom with a rising low. Okay, higher lows. You are starting to see this. Do you see this, guys? Okay. It could be a cup with a minor handle. Whichever the case, I think the stock is good for 440. I think we get 20 points plus on that. But Chipotle is not the type of stock that on reasonably good earnings or what they project will stay up 20. It'll just go nuts. Now, what is going nuts on Chipotle? What is going nuts on Chipotle on something decent that they say, and they don't talk about more E. coli cases and crap like that, and they actually talk some sense saying they're opening those stores and stuff in the Northeast, the pizza store, the burger chain, and all that stuff. You will see the stock at 481 very, very quickly. So you got some pretty substantial move here. On the low end, we know what it is. We tested the downtrend breakout. That's 386. That's 20 points. You can handle 20 points in Chipotle. Don't have to go nuts. You can buy 20 points lower. Or a low of 360. 360, you buy. Saying all that, if they say something completely out of the blue, it's I don't know. Then you short the stock. I will. But I don't like shorting the stock because it's heavily shorted, and I don't like, like shorting guys who have billions of dollars in their pockets to deploy, and that's why they're active as investors. You just don't do that. And traders who do that suffer the same pain and suffering like Tesla. All right? End of story. So these are the levels I'm looking at. And JP, you can see them. 440 and 470. And 480. Max move after earnings 480 on the good side. On the bad side, you could take a dip. You could take a little scenic tour down to 386. That's 20 points lower, which we see it anyway. Or worst case scenario down to 350. Okay, price line. Price line, the best charts I have are again on the quad algo chart, but let's take a look at this. Price line has moved up a lot, okay? And if they miss, they're going to slaughter the stock, meaning you'll be down 150 points in 2 seconds. And it's happened before. So on that note, let's take a look at the weekly chart. On a pure technical basis, it's a buy, 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 buy. But technicals don't always tell the whole picture, right? It first takes a deep dip. It takes a southern route coming down on the dip, and then it turns around and goes. On a technical basis, this is your weekly. It's going higher because it's broken out. This is your monthly chart, which puts the whole picture in perspective. This is the ultimate case of the biggest cup known to man since 2000. Stock was $6.03. $6.03 in 2002. Holy cow. Okay. Massive volatility. Major bottom at 1,000. Major bottom at 1,000. We were in the stock at 1,100. All video casts, all out there for people to see. There's a big handle. Monster cup, 10-year cup, 15-year cup. Monster handle, and now a breakout. Question is it really overbought where it is, or is it going higher? I can't tell you. But I think if they deliver numbers strong, which I think they will. But here's the problem with price line. Just keep in mind, there's a lot of factors in price line earnings which you and me don't, you guys probably won't understand. A lot of currency-related factors. 70% of price line business is Europe. With the stronger dollar over the past couple of months, they could have a currency impact. That could dilute their earnings. So whatever the case, it's either 100 points down or it is basically going to be 100 points lower. It's 1480. That was the breakout level right there. 1472. Okay. This is the depth of the handle. Let's do this math for you guys. 984. What's the depth here? 984 and 1460. What's this level here? 1472 is 488 points. 488 from this breakout of 1472, you come to 1960. Now that's on a monthly basis, and that's why you have a lot of targets on price line at 1900. Mystery solved, because the depth of this move, this is 488 points. Okay, it's a simple rule of the thumb on a monthly. This obviously zigzag its way up. This was the breakout. Add 488 points to 488 points to 1472, which is right here. You arrive at 2000, around there. Now that's the monthly picture, just so you know. And if it breaks out and stays above this line, that's where it's going. But that's going to take multi-months, and by that time, you might not be around. So let's take a look at a shorter term picture. Very hard to read. It's going higher. So at this point, I would do this. 1 hour, forget it. I mean, it's just, yeah, I know what I'm going to do. So for price line lovers, this is the way you do it. And hats off to Rip, because he told me the day before, love playing price lines on Fridays. It's always a 20-point mover, and boy, were you right. And I thought of you. And I thought of you when you said that, and I said, man, that kid was right. So I will always remember that, and we'll always play price line on Friday, because I was too late on playing the lottos. I played a little bit for myself, did okay, but man, could have played it like a monster. So, but we were doing well in other stuff, so no excuses, but I should have done it. But you were right, Rip. So
thanks, Clue.
No problem, because you did say it, and it's there on the tweet. I can't deny that. All right, so here's your 1 hour chart. Not too much upside, right? 20 points. Right there, upper end of the channel. Now that's an hourly short-term picture. Now if it breaks out of that, then that's a different story. Then you're looking at the 1700 level. So it's kind of a big question mark, but the upper end of the channel, the real buy point was right here, which I did at that time. I will take credit. Did put out the 1570s and the 1580s at 1550, 1560s weeklies, which went berserk as trade alerts, which we did very well on. What I missed out was on this part when it took off. Okay, so bottom line is that this is where we are with price line. Any other quick questions, please, that I can answer? BAC. BAC it's a tough one to call here, because banks have they're not stalled. BAC long term is going higher, but the question is, this is BAC's longer term picture. I don't know what your time frame is, Frank, but this is the breakout level. So it's certainly broken out. So anything below 20, the stock is a short. So given the depth of this, the stock is going higher. But there's a lot of the problem with these things there's not a problem, is that they're so dependent on the movements of the yields, the 10-year government bond yield. If the 10-year government bond yield is not moving higher, which is one of the last things that we look at, okay, then BAC just banks have a difficult time going higher. Then any comments from the big shots in power about what they intend to do with the Dodd-Frank rule and all that stuff, eliminating the rules and regulation on banks, because one headline I read was not very friendly to banks. It said that Steve Mnuchin, who is a Treasury Secretary, was Goldman boy, okay, the current Treasury Secretary under Trump, he's saying that he might not loosen that much of the Dodd-Frank prop trading rules, and that the prop trading means that bank can trade like bandits, with their clients' money, and which was now they can because of the Dodd-Frank rule. But if they don't give them that and that actually was part of the reason too for the collapse of the financial system back in 2008, because trades went wrong, and so if they don't loosen it, banks are not going to move that far. So it's right there, the upper end of the channel right now. It is a bull flag. It is a bull flag. I'll give you that. So that's positive. And we want the banks to move because they powered the markets higher. This is a bull flag. Question is, how fast does the bull flag move? On the daily, it's creating a nice thing. So it'll trade between, here's your answer, it'll trade between 21.75 and 23.42 till it breaks out of the range. And once it breaks out of the range, you're eyeing another $1 or $2 higher. That's 25. So that's really where we are. There's no technical breakdown. It's moving steadily ahead. And I would love to see the Bank of America's really take off, because that means that things are really picking up in the real economy in the U.S. So that's the answer. Any other questions, anyone? No one? Okay, so we're going to wrap this up. Futures are down about 8 points, 7 3/4. This was a very strategic and transparent update on the markets. All levels shown. Keep your position size reasonably small. 2017 all year is going to be deep volatility. It's going to be political comments, tweets, stuff going on overseas, all kinds of political, economic stuff coming out here. Here's the other part. The Fed is actually out of the picture here. The Fed has handed the mantle of volatility to the new administration, period. The Fed is going to raise rates 2 or 3 times this year, possibly 3 times, but don't expect the Fed to control the markets as they did for so long. That's why it's so important, and that's why the volatility is so intense, that every comment coming out of the new administration is going to move the markets. So that's the way it is. Thank you for listening. See you guys tomorrow morning. Have a great evening, guys.
Thanks, Lou.
Sure.